What causes a recession, and are we there?
Okay, so we don't think we're there at a recession right now. What causes a recession is either a demand shock or a supply shock, kind of simple in that aspect, but something goes amiss in the economy. In the current situation, we think all of the slowdown in manufacturing is traceable back to the supply shock, tariffs. Right? If you go back to 2015, that slowing is causing by problems in the energy market. Go back to 2008, we have that little issue with the housing market.
Little issue.
Just a tiny little thing. I don't know if everybody noticed, but something goes amiss, right? Either a supply constraint, firms can't get the inputs they need to produce, or for whatever reason, households or firms get nervous about the future and they pull back from consumption, they pull back from investment.
Are there any signs of that happening right now?
We don't think so. We don't think so. We remain relatively optimistic on the underlying U.S. economy. Yes, sharp slowing Q4, Q1. We've seen manufacturing start to heal from that. Long ways from done. Tariffs were big. We have another round of tariffs coming up. Makes us a little bit nervous. But you look through all of that, and we think the trends are okay. What we don't see in particular is what Jay Powell is afraid of, is this confidence shock permeating through the economy.
So why is it that the credit markets and treasury markets are apparently seeing things that are not there? Why are they going with inverted yield curves? Why are long-term yields dropping like a stone right now? And why are they negative in places like Japan and Germany?
I think that you have to look back and look at the risks to the outlook. So, I just said we're pretty optimistic. We're on the bullish side for the economy. And yet, with this next round of tariffs coming on, we still see elevated risks of recession over the next 12 months. That matters for bond markets, who have to take into consideration both what's most likely to happen, but then everything else in that distribution.
So if that is the case, what exactly would be the outlook for the U.S.? Is this a situation where the U.S. is the best house on a bad block if the global economy is starting to slow down?
I think not only is it the best house on a bad block, I think it's a pretty good house at the moment. We see a strong recovery in manufacturing, low levels that had that drop. We see the household sector still booming. We have yet to see true cracks in the U.S. economy.